Happy Good Friday, everyone. It is Friday, Easter Friday, Good Friday, March 29th at about noon, and the markets are closed. And it's giving us a wonderful opportunity to get caught up in the markets. I am Bagadon, and this is StockMarketCaddy.com. I'm about to do a few things here. I'm going to introduce a brand new tool that we call SMC for Stock Market Caddy, Retail Trader Radar. If you stay with us, if you are a monthly member, you will be seeing this every night. If you are an annual member, you will have this on your desktop by Sunday night. If you have any questions, don't hesitate. If you are passing by, I'm going to show you what this is and how it works. In fact, we're going to show everyone. And while we're doing that, at the conclusion, we're going to be able to give a real-time view of where these markets are. Let's get started. The SMC Retail Trader Radar is running on this TradeStation proprietary tool called a Radar Screen. And what we have done, let me shape this up here. What we have done is to write a code whereby the trader, and what we've done here is plugged in all 500 stocks of the S&P 500. You might do it with the NASDAQ 100. You might do it with the mid caps. You might do it with the small caps. It's entirely flexible. And what it is tracking is the 5-day EMA, exponential moving average, the 10-day EMA, the 20-day EMA, 50-day EMA, and the 200. Now, as a general rule, or a general approach, at Stock Market Caddy, we don't put a whole lot of credence on moving averages. However, we do know that the retail trader out there, the general public, they do. And we do want to keep an eye on what they're doing, what they're thinking, and how they're behaving. And this particular tool, if you stay with us, is going to be very, very interesting to you, we hope. So what we can do here, and by the way, we use the EMA because it is an exponential moving average and it's weighted toward the most recent moving average as opposed to a simple moving average. So we get a little bit of an edge, little bit. This is going to calculate for us what percentage a particular stock is up and over its 5-day EMA or under its EMA. As an example, NVIDIA is 1.32% under its 5-day EMA. This particular stock, Constellation Energy Group, is 1.03% over its 5-day moving average. Now, although we don't use the moving averages in a big way, we do know that a lot of the brokers and brokers out there will not put any money into a stock of their clients unless the price is over the 5-day EMA. And they can be fast little traders. You can see if one is trading off of the 5-day, we would classify that as a fast trader. The 10-day EMA, a moderate trader. The 20-day EMA, a slow trader. The 50-day, the person who's tracking the 50-day, we would consider, and they might consider themselves an investor. And anyone trading around the 200-day, we need to correct that spelling, it's Warren Buffett style. So let me show you what we can do. We can sort, and we can tell you, and this tool can tell us what stock is rocketing up and over its 5-day EMA. We can sort them, and that stock happens to be AES. Now, we're not going to get into all the different actions one could be taking and styles, but I think and I hope you can see the value in being able to do this at a glance. And we're doing this without having to open up any charts, in case you got chart blindness or chart vertigo. But what I want to know is how many stocks on the 5-day EMA are over. I'm going to scroll down. We'll get a number because we have a reference row. Let me scroll down, bear with me. So out of 500 stocks, 434 stocks are over their 5-day EMA. That's kind of interesting, but I'm going to show you what we're going to do with that in a moment. Now, in the interest of time, we have done this for each category, the 10-day. Out of 500 stocks, there are currently, on Good Friday, 435 over their 10-day. The 20-day, I have to look at my notes, is also 435. The 50-day is 438 stocks over the 50-day, and the 200, 421. Kind of interesting, right? And much of this could be very actionable to you, could be very helpful to you once you know what stock you're most interested in your classification of trader. What is this? This is how we calculate the overall breadth of the market and how we can keep a really good eye on the retail trader. Now watch what I'm going to do. I'm going to come in here and edit. I'm going to come to the 5-day, and it's currently set at 50. I put them all at 50. And before we go here, in the market total is an input. So for our annual members that have this tool, these are inputs. It's not done fully automated. It's kind of semi-automated. You'll have to plug in some numbers and know the market total is 500. If you were doing the NASDAQ 100, you would put in 100. But what I want to show you before we put in those inputs is there's going to be an overall calculation. When the market overall, when less than 20%, less than 10%, and it has happened over the last few years, when less than 20% of the market is over its moving averages, we're going to get an overall breadth reading, and it's going to be green because you just about want to buy anything and everything because the overall breadth of the market is terrible and folks are probably not interested in buying stocks, and that's when we want to be buying stocks. Referencing Warren Buffett, he has an old saying, when they're crying, you want to be buying. Meaning when the market is selling off and everyone's crying, you want to be buying. And when they're yelling, when they're all so happy and want to tell you how much money they've made, you might want to be selling. The counter trend. You make the most amount of money buying stuff when people don't want to buy stuff, and selling stuff when they don't want to sell it. It's counterintuitive. Now I'm going to, as an example, I'm going to put in an input here. And I want you to pay attention to what happens. I'm going to deliberately put in, not the exact number, we're going to do that in a moment, but I'm going to put in 250. 250. So this would represent half of the stocks, which is more, being over these averages. And watch what happens. Suddenly, the overall breadth of the market gives us a 50% reading. It's not fully green. See, it would have been better to get it when nobody wanted it, down at 10 to 20%, and it has been there. But what is the overall breadth today? So let me show you, and I'm going to plug in. So we mentioned earlier that the 5-day total was, I have to look at my notes, 434. The 10-day number of stocks was, or is, 435. The 20-day, let me make sure I have this right, is also 435 by chance. The 50-day is 438, and the 200 is 421. Now you can't add and take averages of averages, but if you have the market total, we've done the math for you, and watch what happens. We now know that 87% of the S&P 500 is completely over all of its averages. And notice the background. It is screaming red. This would be a good place if you've got profits, if you are a fast trader, if you are a moderate trader, and you are even consider yourself a slow trader, even an investor. This might be a good place to take a little profit. Aggressive traders can do other things that we teach and show. We won't get into that today. But if you are not in this market and haven't been in this market, this is not where you want to be adding, in our view, we certainly wouldn't, a tremendous amount of new money, brand new money into the market when we have an overall breadth reading of 87%, because we could get a pullback that is significant. I am Bagger Don at StockMarketCaddy.com. This is just one tool of more than 70 tools that we are building and have built over the years and will continue to build for the benefit of our monthly members who get to see these tools on a video every night, and our annual members get this on their desktop. And if our annual members are seeing this, they have an earlier version, but we have made it even more useful and easier to use so that they can plug it in. You will have this on your desktop with the correct spelling of Warren by Sunday night. Have a great Good Friday, a great Easter weekend. I will be in the office much of today and even tomorrow morning. Then we'll be golfing and enjoying the long weekend with everyone else. But don't hesitate if you've got questions. 813-758-8263, and we invite you to visit the website. We are all about building unique, actionable trading tools to help you make good trading decisions, short term or long term. Have fun.